The world thought a ceasefire was the beginning of the end. But in the last 24 hours, the narrative has shifted dangerously. President Donald Trump has issued a chilling warning to Iran. The European stock markets are flashing red, and Brent crude oil is rapidly approaching the $100 per barrel mark. Why did the early week rally vanish so quickly? And what does Trump's real agreement demand actually mean for your wallet? Today, we are breaking down the massive shift in global markets, the bottleneck in the Strait of Hormuz, and why the safe haven of gold is suddenly behaving unexpectedly. This is a deep dive into the economic ripples of a Middle Eastern crisis that refuses to cool down. Stay with us as we unpack the numbers that will define the coming months. Let's start with the opening bell in Europe. On Thursday morning, investors woke up to a sea of red. The Pan-European Stoxx 600 dropped 0.2%, with Germany's DAX and France's CAC 40 following suit, slipping up to 0.3%. But why is Europe so sensitive? Unlike the US, European economies are heavily dependent on imported energy. When tensions rise in the Middle East, the Eurozone feels the heat first. However, there was one outlier. The UK's FTSE 100 actually rose by 0.2%. Analysis deep dive. Why the FTSE 100 outperformed. It's simple. London is home to energy giants like Shell and BP. When oil prices climb, these companies' valuations soar, keeping the UK index afloat while the rest of the continent struggles with rising industrial costs. The primary catalyst for this market jitter was a statement from the Oval Office. President Donald Trump made it clear, U.S. military assets are not going anywhere. He stated that the deployment around Iran would remain in place until a real agreement is fully complied with. The conflict of terms. Trump's stance. No withdrawal without total compliance. He warned of further conflict if terms are breached. Iran's response, signaling that further talks are unreasonable under current military pressure. The proxy factor. Ongoing Israeli strikes in Lebanon have added fuel to the fire, making a regional escalation look more like a probability than a possibility. If this ceasefire collapses, we aren't just looking at a local conflict, we are looking at a global supply chain disruption that could dwarf the 2022 energy crisis. Now, let's talk about the black gold. After a brief dip, Brent crude shot back up to $97 per barrel. This is the number that keeps central bankers awake at night. The focal point, the Strait of Hormuz. 1/5 of the world's total oil consumption passes through this narrow waterway. Currently, shipping flows are tightly controlled, and Iran maintains significant leverage over transit. Why this matters to you? When oil stays near $100, the cost of everything from the plastic in your phone to the broccoli at your grocery store goes up. We are looking at a cost-push inflation scenario where even if you don't drive a car, you are paying for this conflict every time you use your credit card. In times of war, people buy gold. So why did gold slip 0.6% today? This is the inflation paradox. Usually gold is a safe haven, but when oil prices spike, it stokes fears of long-term inflation. This leads the Federal Reserve and other central banks to keep interest rates higher for longer. Higher rates lead to higher bond yields. When you can earn 4% or 5% on a government bond, holding gold which pays no interest becomes less attractive. We are seeing a tug-of-war between fear, which pushes gold up, and interest rates, which pull gold down. Currently, the fear of a stronger dollar is winning. So, where do we go from here? The market is currently in a wait-and-see mode. The next 72 hours are critical. Iran sends its delegation to Pakistan, and we see a de-escalation in rhetoric. We might see the DAX and CAC 40 recover. However, if the Strait of Hormuz remains restricted and oil crosses the $100 threshold, we could be looking at a significant market correction. The bottom line. 1. Watch oil. $100 is the psychological breaking point. 2. Watch the dollar. A rising dollar will continue to suppress gold and emerging markets. 3. Watch the news. Any breach of the ceasefire could trigger an immediate 5-10 drop in global equities. What do you think? Is Trump's hardline approach the only way to get a real deal, or is it pushing us toward an avoidable war? Let us know in the comments below. Don't forget to hit the like button if you found this analysis helpful, and subscribe for daily deep dives into the world of finance and politics.